25th of May, 2023, Thursday, MAO if hell once again. All right, guys, I'm having a bit of sore throat right now, so I'm not in the best shape to come online today, but not important because now the more important thing is this: will US default on their debt? And the best person, in my opinion, to ask will be this guy, the Wall Street guru, okay, inverted, all right, Jim Cramer, because apparently he just gave a very strong view on very strong view on the US debt. And something interesting, this is a tweet, but now I can't find it anymore. Interesting. Yeah, let me know if you know where is it. All right. So once again, guys, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Now, first of all, guys, thank you so much. I hit my 1,000 subscriber, and tomorrow on the 26th of May, I will conduct a very special video. It's a short video. You just need to watch it and then put a comment there, and you are done. You'll be part of the spin the wheel, all right, and have lunch with me. And this time around, we're going for a much bigger group, okay? So watch out for this important video tomorrow, all right? Thank you once again for the strong support. All right. The thing is this now, as I said again, we have more than 200 traders trading our TCS right now, our Trade the Boys crazy system. And you can see that the testimonies is keep on coming in. They are really, really good stuff. And you can see that, right? They really say the same thing. They know that the sign of reversals coming in, they can consider take profit, and they can cut losses fast. And the best part is that all the technical points are all automatically drawn. And you can see over here itself that some people take some time to adapt to it, but now after it says a few times, they notice that now things is much easier to trade. And of course, this is so powerful that they're giving hints on the buying, the selling, the boys are buying or selling, and most important, they don't need to care about the fundamental of the market. So this is why a lot of people are getting this coming on board right now to try it out. So guys, instead of burning your account, this is the time to really make money, okay? Let me know if you want to join us. Okay, so yesterday we talked about the S&P 500 coming down, and I mentioned that the number will be 4112. Remember that I said that the market will be coming down towards here, 4112. Now, yesterday we saw the S&P was trading at 4153. So imagine if someone tells you that the number for S&P is going to go down to 4112, what do you think will happen? The amazing part is the S&P really went down to 4112. Oh my God, this is really incredible. All right, so that's the reason why you need to have the TWB system, because it really tells you when the boys are buying and what can you do. And of course, I did mention the buying momentum is still around. So that's why when the market hit 4112, you must buy back your position, okay? All right. At the same time, now you can see on VIX, yesterday we talked about VIX, we said that VIX is a buy, and I said that 19 is still good to go, and we can see what happened to VIX. VIX went up to 20. Oh gosh, okay. So once again, this actually explains on its own why the market is going up right now. This is something really imagine. So guys, to me itself, right, if the VIX peers past 22, something big is going to be happening. So be very careful, watch the VIX at 22, because you don't want the market to go there. If the market really goes to 22 and stays above it, that means that something big, something nasty could be happening, all right? Now, my target this time around is about 26 to 28. So let's see whether this will happen, okay? All right, so there is VIX for you. Now, the thing is this, how about losing $11.2 billion and still the richest man on earth? Now, apparently I covered this about all the luxury products and goods, right? Louis Vuitton. And now you can see the Bernard, he has lost $11.2 billion recently because the share price came off by almost 10% or more. And after that, he's still 191 billion richer than a lot of us. All right, my point is this a telltale sign that this is the end? Well, I can safely say that if this stock continues to go down below 170, there should be some artificial support around here. 168 to 170 should be the artificial support. And to me, it's all right. This is actually a very good sign to tell you that maybe players, traders, investors are tightening their belt. They don't want to spend on all this product anymore. Let's think about it, yeah? So let's recap what happened last night. Very interesting. Now the Dow lost 255 points, the NASDAQ down by 68, and S&P down by 30. So it's not a lot. And if you look across the board, right, Microsoft is hardly down 0.45. Apple is up by 0.16. And that's it. Nvidia down by 0.49. Of course, aftermarket is short by 26%. Okay, the thing is this, like Amazon is up by 1.53%, but there's no much news on Amazon. So all I can say is this: if there was no support for Amazon, maybe the S&P or the Dow will lose more than that. But again, the market now is sliding down. My question is, will this continue? So Dow dropped for the 4th straight days as the US default worries continue, because now more and more people believe that this will cross the 1st of June, the X date. All right, we know that House Speaker Kevin McCarthy says in late morning press conference that the negotiators remain at odds on the spending caps and blame the Democrats for the coming to the table so late in the process. And he also believes that the negotiating team could make progress on Wednesday. So he's like, whacking the Democrats, but at the same time, he tried to make things better because he also doesn't want the stock market to get into a mayhem, okay? So he also don't be the one that being blamed for stock market coming down. And of course, Janet Yellen keep on repeating that there's a chance of a default in early June, and she really wants things to get sorted out, okay? Now, all we can say is this: we all know that the Fed meeting minutes came out, and it does signal more uncertainty, and they believe that Central Bank is still going to hike in June. In fact, I will show you the Fed fund probability. You'll be stunned by some of the numbers coming up, all right? Now, one thing to note is that the debt ceiling fear has sent yields risk, the T-bills, above 7%. Now, this is really scary because this number wasn't seen for a while. In fact, itself, right, only back in early May, we saw it shooting to about 5.5, and it had been basically hanging around here for quite a while. But the last few days, we can see that it's jumping up to 7, and this is not a sign, because the last time we see something like this, the market actually went into some selling mode. So be careful, guys. This is not something to toy around, because this is going to be big. Now, let's look at the Fed fund probabilities. Now, the thing is this: currently now we are 5 to 5.25. So the people are all looking at the 14th of June, which is next month's meeting, to status quo about 63%. But very interesting, there are some people looking at a hike, and I've been telling you this: there should be a hike coming in June, and the number from 5% to 12% to 24%, and today's 36%. So that means more and more people believe that there will be a rate hike coming in. The thing is this: right now, if you're going to be the next meeting on the 26th of July, well, apparently there are still people believe that there could be one more rate hike in July, which I totally stand by it. As a matter of fact, I have been saying this: there should be the eventuality of 6%. I believe that only when we hit 6%, we will see three things happening. Number one, I believe that one or two more banks will get hit pretty badly. Number two, the stock market will be down by another 10%. Okay, by then 10%. And of course, when all this happens itself, right, okay, what will drive the market is the inflation will drive down below 4%. So when you have all these things all in line, likelihood, it has probably hit the fairness of numbers for Federal Reserve to expect inflation to stay about 3 to 4%. And then that's where later on we will see the rate cut. And of course, the rate cut now people are looking at is when? They're looking at by the 1st of November meeting, there will be rate cut. So of course, Federal Reserve said there will be no cut this year, but from the Fed fund probability rate, right, the Fed fund watch, the Fed watch tool, it actually says that there is expectation of rate cut by November. So what do you think, guys? Let me know in the comment box and see whether we have the same thinking. All right. Now, the thing is that another thing to get worried about is the CDS, the credit default swap. Now, the thing is, in April, the credit default swap shot up from 895 all the way to 160. Then after that, it pulled back because there's some reprieve and saying that the system is okay. But last 2 days, the CDS shot up again. So why? Obviously, there are many ongoing talks that there could be a failure in the US debt. And do understand this: if US is to fail to to their debt, right? You can imagine people will start to sell their bonds away because there's no more trust at all. And if they sell the bonds, the US dollar will naturally goes down. And if that happens as of likelihood, that will cause a lot of evil because the dollar comes up, inflation will shoot up, the commodities price will go higher, stock market will be also sold. So this is something that they cannot afford. So that's why I don't believe there will be default, because it's too much, too big to allow that to happen. All right. And of course, something to note here, this is the Bloomberg Industrial Metal Sub Index versus the NASDAQ. Now, by right, they seem to work in hand, right? It means they work in the same direction. But interestingly, back in June last year, we can see that there was a divergence, okay? June and July. All right. And similarly, now we are back to the same point again. This is something incredible. So what I did was that I took the owners to check on the market. Then I got my stunning chart. Take a look. So what happened in June, July last year was that the market actually went into a consolidation for a couple of days, which is something very familiar and similar right here. Then after that, suddenly the market just came off quite a fair bit from 41.10. It went down all the way to 36.50. And if you look at it, my chart right now, we are not too far away from the same thing. So if something is a repeat, right, maybe we will see coming back down to 38.07. Now, the reason why I didn't go lower, because back then it was already below the 200-day moving average, but now we're still above the 200-day moving average. So maybe the market may not go down as much, but a pullback seems certain. What do you think, guys? Let me know in the comment box, okay? So with that understanding, I'm going to bring you the best Wall Street guru, in my opinion. Okay, obviously, you know that I'm not saying the truth. Now, back in September 2022, September the 9th. Now, at the time, NVIDIA was trading at 130, and Jim Cramer came on and says that his particular trust or fund is shorting NVIDIA, and he said that it's a loser. Wow, okay. Now, the thing is this, let's take a look on what happened that very day. Well, indeed, NVIDIA did go down lower after the day Jim Cramer called for a sell, say there's a loser. Back then was 130, as you can see on the screen, was 130. It went out the low about 105 area. So he's not wrong. He was quite correct. But the thing is this, after that, oh my God, look at NVIDIA. Look at it. Oh my goodness. It not only went past 130, it went even higher, and to date, 305. Oh my gosh. I mean, if this is a loser, then I don't know what's a winner then. He's basically wrong by 200%. And guys, I am not even near there yet. This is not the only one. In fact, there's so many, I lost count. Let's take a look at this one here at Foot Locker. Now, UBS says sell on Foot Locker. And the thing is this, Jim Cramer came back and said that if you do this, please remember to invite me to your funeral. In short, itself was trying to say that if you short Foot Locker, you will lose a lot of money, and likely you will get yourself killed. But the problem is this, Foot Locker price did stabilize about $40, but the last few days, Foot Locker price has went below $30. Oh my God. And I checked on UBS, they did downgrade Foot Locker back then in March. So it's actually correct, this Twitter. And of course, who got it correct? UBS got it correct, because the earnings came out surprisingly bad. And this is something that, wow, did Jim Cramer didn't know about it, or he knows it, or he doesn't know it? Interesting. So that is another one. But the ones that he had been calling, from Baston to Lyft to Coinbase to Netflix to First Republic, SVB, Paramount, Home Depot, Foot Locker, this is the stocks that he called for buying, and none of them performed. In fact, it's all right. This is unbelievable. Back on 9th of May, why betting on Home Depot could be a win? So on 9th of May, Jim Cramer say you should be buying Home Depot. But when the result came out on the 16th of May, he actually says that Home Depot miss shouldn't surprise anyone. What the? Oh my God. I mean, he can flip, he can change his position without batting an eyelid. So this is why I say he is the best, all right? So if he's the best, what is he saying right now? Oh my God, look at it. Jim Cramer actually says he's extremely confident that the US is going to default. And that is something that he posted on 24th of May yesterday. But the thing is right now, I go back to his Twitter, I can't find it anymore. But again, the power internet, everybody record everything. And now people can find it. And of course, people who see it, they find it, okay, if Jim Cramer is calling for a sell, it's time to buy everything. All right, the thing is this, Cramer a few days ago, in fact, says that he don't believe that there will be a failure. In fact, he says that, right, Wall Street is not worried for a debt ceiling crisis. He thinks that there will be no default. And yet, 2 days later, he said there'll be a default. And then again, we all know his pattern. Who knows that he maybe is sent by Wall Street guys to confuse you? I don't know, guys. What do you think? Should we trust Cramer or should we don't trust Cramer? Put in the comment box. I'd love to hear from you. All right, guys. That'll be all for today. There'll be no technical lines for charting for today. Take care. I'll see you tomorrow. Take care. Bye-bye.